Good morning from Chicago, the risk management capital of the world. I'm Alan Nuckman here at the CME Group at the Morning Market Stir for Tuesday, January 17th, the day after the long holiday. Last week was interesting, not that much action net, but we did see some new highs in the NASDAQ 100 continuing to lead the way. Actually, on a weekly basis, the NDX was up 1%, the S&P was unchanged, and the Dow, no 20K day, it was actually down 0.5%, minus 78 points. Last week was the first full week of 2017, and earnings season kicked off with the big banks making big bucks. So also on a week, we had gold up $23, a nice healthy bounce there, and crude oil lost $1.60, but settled right at that 52.50 point, which is the midpoint of this larger overall range for the last 6 to 8 weeks, trading between 50 and 55. Lastly, the dollar index has been a couple weeks since new highs, starting to drift lower. Like I mentioned last week, some people are looking for a top there. So, after the mixed action last week, where do things stand here on this Tuesday morning with a 4-day trading week once again? Well, stock index futures opened lower last night, drifting lower right now, even the S&P down 6. We've got the NASDAQ down 17. Again, new highs almost every day so far in 2017. A little bit of a breather there. And the Dow is down 8, but we're still 125 points away from 20,000. Crude oil getting a boost here, holding that midpoint support, making a move up to 54, so that's up 1%, up 50 cents. We've got gold on the move as well, up $17 at $12.13. New 8-week highs in gold and back above $1,200 an ounce because the dollar's going down. The dollar is at the lowest level it's been since December 8th, so that's more than a month ago, believe it or not there. Also, an update on yields we've seen on some bond unwinding here as far as yields go. We're at 2.93 right now in the 30-year, and what do we have here? 2.3 or so in the 10-year note. So we've seen a little bit of a rally in the treasuries, a bid back higher in the euro currency, gold, and in bonds as safety has come back. So to summarize where we stand, we're down in the stock index futures right now, down about 0.25% across the board. Alan Nuckman here at the CME Group, where it all comes back to commodities.